Welcome to Know What You Are Investing podcast, where we decode the world's top companies. What they do, how they grow, why it matters. In today's episode, we break down NVIDIA's record-setting Q2 2026 earnings. From explosive data center growth and the rise of Blackwell platforms to the risks of U.S.-China export restrictions, we'll cover both the good news and the challenges facing this AI giant. Whether you're an investor tracking NVIDIA's future or just curious about how AI is reshaping global markets, this recap will give you the insights you need. Let's dive in.
Welcome to Know What You Are Investing podcast. We decode the world's top companies, what they do, how they grow, why it matters. Today, we're doing a deep dive into NVIDIA's Q2 fiscal year 2026 earnings call. We've got their recent 10Q filing, the full earnings call transcript, basically everything we need, our mission. To unpack the latest on this tech giant for you, our investor listener, give you that clear, concise, analytical recap.
That's right. We'll pull out the biggest wins, look at the strategic themes driving things forward, but also critically, the challenges, the risks, and what you really need to keep an eye on moving forward. It's a fascinating snapshot of their health and where they're headed.
Okay, let's dive in then. NVIDIA just dropped another record quarter, absolutely smashed past their own outlook. Total revenue hit, what was it, $46.7 billion?
Yeah, staggering number.
And that's a 56% jump year over year, which is huge. But maybe even more impressive is the 6% sequential growth, especially after such a strong Q1. Was that kind of sustained momentum really expected, given, the wider economy?
That's a great question. And no, it wasn't a given at all. What's really fascinating, I think, is that they achieved this growth while dealing with what the CFO called a dynamic external environment. Mm-hmm. It just speaks volumes about the underlying demand, almost like an insatiable demand for their stuff.
Yeah.
Especially in data centers and AI. It almost seems to defy the broader market trends.
Right. And when we talk demand, the star of the show is still undoubtedly the data center segment. Revenue there, $41.1 billion, up 56% year over year. Breathtaking. Mm-hmm. And here's the kicker. It grew sequentially, even with that massive $4 billion hit from the H20 revenue decline because of the export restrictions. What exactly is fueling this kind of relentless demand? How can it just absorb that kind of impact and still grow?
Well, it's overwhelmingly driven by their accelerated computing platform. That's really the engine. It's the backbone for, large language models, sophisticated recommendation engines, generative AI, and particularly this emerging area of agentic AI applications.
Agentic AI. Maybe unpack that just a bit.
Sure. So think beyond just generating text or images. Agentic AI involves systems that can actually plan, reason, and then act to achieve a goal, like a super-powered personal assistant that could book your travel and manage your calendar all on its own. That kind of thing needs enormous compute power.
Yeah.
And the demand isn't just from one place. It's broad-based, coming from the huge cloud service providers, the CSPs,
right,
but also enterprises, even, sovereign nations building their own AI capabilities. It's really widespread.
Okay, now here's where it gets, I think, really interesting. NVIDIA's Blackwell platform hit record levels, grew 17% sequentially. And get this, they also started production shipments of the new GB300 in Q2. So Blackwell's ramping like crazy, but they're already shipping GB300. How critical is that? Does it hint at maybe Blackwell saturation, or is it just about staying ahead?
It's absolutely about staying ahead, extending that lead. They've described the transition to GB300 as seamless for the big CSPs. Wow. And production is apparently at full speed now. They're churning out something like 1,000 racks per week.
1,000 racks a week? Wow.
Yeah, and they plan to accelerate that even more in Q3. So this rapid deployment is key. Plus, the Blackwell Ultra platform alone generated, quote, tens of billions in revenue.
Tens of billions.
Just from Ultra.
Just from Ultra, which, isn't just about demand. It also suggests NVIDIA still has incredible pricing power at that bleeding edge. Customers are clearly willing to pay top dollar for that performance, probably because they expect a fast ROI from these AI superfactories. And the GB300 NVL72 systems, they promise that 10x improvement in token per watt energy efficiency compared to Hopper.
Right, the energy savings.
Exactly. So same electricity, 10 times the AI operations or tokens. That's huge for cutting costs in these power-hungry data centers.
Now, the AI powerhouse is clearly data centers, but it's easy to forget NVIDIA's strength is also its diversity, right? It wasn't just data centers doing well. Gaming revenue hit a record $4.3 billion, up 39% year over year, 14% sequentially, driven by those Blackwell GeForce GPUs. And even professional visualization and automotive saw big jumps. That diversified strength is still key, isn't it?
Yeah.
Oh, definitely. It shows their tech reaches far beyond just the big AI hype.
Oh,
Professional
yeah.
visualization was up 32% year over year, about $601 million. They mentioned Blackwell sales accelerating in notebooks for AI workflows like real-time graphics. And automotive, self-driving platforms, AI cockpits, that was up a really strong 69% year over year to $586 million. These aren't small bumps. They show their core tech has wide appeal.
And all this AI demand, it's not just the chips, it needs the plumbing too, right? The infrastructure. Which brings us to networking. Record revenue there too. $7.3 billion. Nearly doubled year over year, 98% increase. And up 46% sequentially. What's driving that incredible growth in networking? Why is it so critical for AI?
Because these AI compute clusters, they need incredibly high efficiency and super low latency. You're moving just massive amounts of data between GPUs constantly. NVIDIA's nailing this. Their Spectrum X Ethernet solutions, that's now an annualized $10 billion plus business, showing double-digit growth both sequentially and year over year.
$10 billion annualized just from Spectrum X.
Yeah, that's their Ethernet, specifically built for AI, optimizing data flow. Then InfiniBand, which is another high-performance interconnect, that nearly doubled sequentially.
Yeah.
And NVLink, their GPU to GPU link, that's seeing strong growth with the Grace Blackwell systems. So these aren't just add-ons. They are absolutely essential components for building those AI superfactories. They handle the massive data required.
Okay, zooming out a bit. Jensen Huang, NVIDIA's CEO, he talked about this massive, almost hard to fathom, $3 trillion to $4 trillion AI infrastructure opportunity by the end of the decade. That's just a colossal number. But what are the biggest risks to actually hitting that? Is it competition, geopolitics, maybe a slowdown in companies actually adopting AI?
It is an audacious number, no doubt, but there are some powerful drivers that make it seem, attainable despite those risks. First, you've got the rise of this reasoning agentic AI we talked about. That needs orders of magnitude more compute, like 100 to 1,000 times more, potentially. Second, these huge global build-outs for sovereign AI nations wanting their own capabilities. Third, wider enterprise adoption. And fourth, the arrival of physical AI and robotics. And look, the CapEx of just the top 4 hyperscalers, it's already doubled to $600 billion a year. That suggests we're still early in this build-out, not near the end. The main risks, and we'll dig into this, are definitely geopolitical and competitive. But the market opportunity itself, it looks generational.
And given how fast things move, how critical is it that they're already talking beyond Blackwell, the next generation?
Absolutely critical, paramount. The Rubin platform, that's their 3rd-gen NVLink rack-scale AI system, it's still on schedule for volume production next year. This includes the new Vera CPU, the Rubin GPU, the CX9 Super NIC, a whole suite of new chips already in fabrication.
Vera CPU, Rubin GPU, CX9 Super NIC. Got it.
Right. Vera is the next-gen general processor. Rubin GPU follows Blackwell for even more AI power. And the CX9 Super NIC is key for that high-speed data transfer within clusters. This commitment to an annual product cadence, with 6 new chips for Rubin, that's really key to their long-term edge. It keeps driving down the cost of AI for customers by boosting performance per watt. That's how they plan to keep this unprecedented industrial revolution going.
And they didn't just talk hardware. Software came up too. That's a huge piece of the NVIDIA puzzle, tying it all together.
Huge, absolutely. Their software innovation plus that massive developer ecosystem, they've already improved Blackwell's performance by over 2x just since launch. Tools like CEA, their parallel computing platform, TensorTar LLM for optimizing language models, Dynamo for acceleration, they're squeezing out maximum efficiency. They're also apparently a top contributor to OpenAI's models and software. And Blackwell even introduced this NVFP4 computation. Yeah, it's a new, super efficient 4-bit floating point format. It basically speeds up AI training by 7x compared to the H100 by shrinking the data size but keeping enough accuracy. It really pushes the limits of AI factory efficiency.
We also saw mentions of new applications like RTX PRO servers being picked up by big companies. What's that signal about AI getting into sort of traditional businesses?
It's a very clear signal of that broader enterprise adoption kicking in. RTX PRO servers are designed to fit into standard IT setups, but run both normal enterprise stuff and advanced AI. Nearly 90 companies, including names like Hitachi for simulation, Lilly for drug discovery, even Disney for immersive storytelling, they're adopting these. It suggests RTX PRO could become a multi-billion-dollar product line. It shows AI spreading into workflows way beyond just the hyperscalers.
And sovereign AI, that term keeps popping up. Big government investments. What exactly is sovereign AI and how big is that for NVIDIA?
Right. Sovereign AI is basically a nation's push to own its own AI infrastructure, data, and talent for national security, data privacy, that sort of thing. And yeah, it's shaping up to be a significant long-term opportunity for NVIDIA. They're involved in major initiatives in the UK, across Europe. For example, the EU plans to invest $20 billion to build 20 AI factories, aiming to tenfold its AI compute. In the UK, that Isambard AI supercomputer powered by NVIDIA just launched. And it's not just talk. They're apparently on track for over $20 billion in sovereign AI revenue this year, more than double last year. So real traction there.
And it's not just digital. They're still pushing into robotics, physical AI.
Absolutely. Jetson Thor, their new robotics compute platform, is out now. Delivers a huge jump in AI performance and efficiency for real-time AI right there on the robot at the edge. They have over 2 million developers, more than 1,000 partners working with this platform. Companies like Agility Robotics, Amazon are using Thor. Combine that with NVIDIA Omniverse, their platform for creating digital twins to simulate robots in factories. They're enabling the design of these AI-driven automatic factories. Big partnership expansion with Siemens there, too. It's really the future of industry, driven by AI.
Okay, last point on the good side. Financially, they returned $10 billion to shareholders in Q2, buybacks, dividends, and the board just okayed another $60 billion for share repurchases. What's that aggressive capital return signal to you?
It signals just incredibly strong confidence in their cash flow and future prospects. Simple as that. It shows they believe they can invest heavily in these massive AI growth opportunities because they know how big this revolution is and still consistently return loads of capital to shareholders. It's a powerful statement about their financial strength and long-term view, balancing growth investment with direct shareholder value.
All right. Now, let's pivot. Gotta talk about the bad, because no quarter, especially for a company like NVIDIA in this environment, is without its hurdles. The biggest immediate worry seems to be those export restrictions on the H20 chip for China. That led to that massive $4.5 billion charge back in Q1 for excess inventory. This isn't just a one-off financial hit, is it? What are the longer-term issues here?
No, you're right. The implications are pretty significant. And actually, in Q2, they made 0 H20 sales to China-based customers. None. Zero. Now, the U.S. government, the USG, they did grant some licenses for H20 sales in August. But NVIDIA hasn't actually shipped under those licenses yet. And adding another layer of complexity, apparently USG officials have sort of expressed an expectation, not a rule yet, that NVIDIA share 15% of the revenue from any licensed sales.
15% share.
Yeah, it's not codified, but it's out there. And their Q3 outlook explicitly excludes any H20 shipments to China. They mentioned a potential $2 to $5 billion upside if things calm down geopolitically and they can use those licenses. But that's a big if. It just highlights this huge ongoing uncertainty and the very real impact of these controls.
And it's not just H20, is it? The sources mentioned this AI diffusion rule, the IFR. That got pulled back, but would have put worldwide licensing on chips like H200, GB200, GB300. That one was rescinded, but a replacement rule is coming, and nobody knows what it'll look like.
Exactly. This rapid evolution of global trade policies, as they put it, adds significant complexity and cost across their entire supply chain. It's not just about specific chips anymore. There's a genuine risk of being basically shut out of competing in China's huge data center market, and potential impacts on manufacturing, distribution everywhere. Plus, now Chinese regulators are apparently questioning built-in vulnerabilities in H20, possibly linked to U.S. legislative talk, which could spook customers there. These broader controls could even hit their gaming stuff, networking gear, disrupting supply chains outside China, too. It's a major headache and a big strategic risk.
Okay, another area investors watch like hawks, margins. Gross margin actually dipped year over year, 75.1% in Q2 last year, down to 72.4% this Q2. What's behind that? And what does it maybe signal about the business or future profit potential?
Yeah, that's an important shift. It's mainly attributed to the Blackwell revenue mix. Blackwell seems to be selling more as full-scale data center systems, which just have a different cost structure than the Hopper HGX systems that dominated last year. So it could signal NVIDIA is moving more towards selling these integrated full-stack solutions, which could be very lucrative, but might naturally have different margin profiles.
A different kind of sale, basically.
Right. And remember, the first half gross margin overall, 66.6%, was dragged down significantly by that big Q1 H20 inventory charge. Now, Q2 margin did get a little boost from releasing $180 million of previously reserved H20 inventory. But still, the underlying trend is lower year over year. They do expect to get back to the mid-70s by year-end, non-GAAP. But investors need to figure out if this is temporary due to product mix and geopolitics, or maybe a new normal as they sell bigger systems.
Okay, let's talk expenses. Operating expenses are way up 38% year over year, 8% sequentially, and they expect full-year OpEx to grow in the high 30% range. Also, inventory ballooned from $11 billion to $15 billion sequentially. That's a big jump. What are the implications there for profitability now and down the road?
Yeah, those increases are mainly driven by compute infrastructure costs for their own R&D, plus higher pay and benefits as they hire more people. They're explicitly accelerating investments to grab these huge growth opportunities, which you probably have to do to lead the market. But it does hit short-term profitability, and that inventory jump, it's needed to support the big Blackwell ramp, absolutely. But it also brings risk, potential obsolescence, needing more provisions. They actually booked another $1 billion in inventory provisions just in Q2. So that impacts the bottom line, too. It's a real balancing act. Invest for the future versus managing today's financials.
Right. And lastly, under challenges, the 10Q pointed out significant customer concentration. 2 direct customers made up 23% and 16% of Q2 revenue, both in compute and networking. Having big customers is good, but that level of concentration, what does that mean in such a fast-moving competitive space?
It's definitely something to watch closely. That kind of concentration always carries risk. And add to that, you've got the rise of really good open source models running on competitor hardware. Plus, the growth of custom ASIC projects, think Broadcom, projecting 55–60% growth in their AI business next year, largely from custom chips for hyperscalers.
So direct competition heating up.
Exactly. NVIDIA always emphasizes its full-stack advantage, co-design, efficiency, and that's a strong defense. But the market is incredibly dynamic. That concentration combined with more competition means NVIDIA has to keep innovating like mad and delivering serious value to hold on to those key customers and fend off rivals.
Oh, okay. So pulling all this together, the good, the bad, the complicated, what should our listeners really be focusing on as we look towards the next quarter?
All right, key things to watch. First, keep a very close eye on anything related to H-20 shipments to China and any details on those new U.S. export control rules. Geopolitics is a major ongoing risk factor here. Second, watch that gross margin trend. Can they consistently hit that mid-70s non-GAAP target by year-end, given the changing cost and product mix? That's a key indicator. Third, how effective are these accelerated operating expense investments? Are they clearly translating into sustained growth and market share, or just squeezing profits too much? Assess the ROI there. And finally, of course, continued strong demand for Blackwell. Plus, any early hints or details about the Rubin platform, its capabilities, the ramp plan. Those will be critical signals for future performance and whether they maintain that leadership edge.
So stepping back, what does this all really mean?
Well, the sheer scale of that $3 to $4 trillion AI infrastructure build-out they're talking about, it really does point to an industrial revolution unlike anything we've seen. So for investors, the question isn't just about NVIDIA's market share today. It's about how well they can navigate these really complex, rapidly shifting geopolitical waters and intense competition to sustain their lead in this fundamental computing shift. How quickly will agentic AI really reshape industries? What completely new markets will pop up because of this incredibly fast tech pace? It's a race, really. A race against time, against competition. Innovation and strategic execution are everything right now.
Thanks for listening. Know What You Investing podcast decode the world's top companies, like what they do, how they grow, why it matters.
Thanks for listening to Know What You Are Investing podcast, where we decode the world's top companies, what they do, how they grow, why it matters. That wraps up our NVIDIA Q2 2026 earnings recap. A quarter of record highs, rapid AI adoption, but also real geopolitical risks. Stay tuned for more deep dives into the world's most impactful companies. See you in the next episode.